Hey yo, what is going on, viewers of the tube? My name is Tyler and you're entering the one-stop shop for everything crypto, fundamentals, price, predictions, investigations, and more. The only thing you won't see me doing is acting like I know TA, because if you didn't know, all these YouTubers are just copying TA from paid courses some of them make fun of. You know the drill, it's time for Chico Crypto. The past month has been a straight up battle to keep the Bitcoin's price head above water, and in this case, the 10K level is where the water begins. This video was shot in the past, on September 20th, and I have a feeling the price will continue to hang around this range just above 10K, because if it goes lower, it falls out of the 5-month symmetrical pattern, and the powers that be know the crypto markets are hanging on this pattern, and the expiry is on the 23rd, which coincides with the launch of Bakkt, which could be in a couple of days, could be tomorrow, could be today. I haven't decided when I'm going to release this video. Today, I don't want to make any predictions or guesses on some voodoo hopium witchcraft. I want to investigate what is actually happening in the crypto markets and the actual money flow into crypto, the data and the facts. I would like to thank Kobol Trading, a member of the Chico Army, for putting together a ton of this data, writing an article on it. Artificial money flow into crypto. Are you sure you want to invest in crypto now? It's in the description if you want to check it out. Now, I'm sure with all the YouTubers, Twitter influencers all shouting moon alt season pump, it's hard to sift through the noise and find out what's actually going on. Luckily, there are a few of us still out there that have integrity and don't solely push the narrative of pump. So the most important thing in the crypto markets that matters is the flow of new money. Where is it going and in what form? There's a very nice chart on coinlib.io, which shows exactly this over a 24-hour period. And it's obvious to see right off the bat, the majority of new money flowing into the crypto markets is coming in the form of Tether, then USD, then Chinese yuan. But what are the exact figures of Tether versus regular fiat currency? Well, thanks to Kobol Trading, they pulled this data for us. This data is pulled from the 17th, when altcoins pumped and Bitcoin remained flat. As you can see on the left is USDT, which had a total of about 4.195 billion pour into the crypto markets. On the right hand, you have fiat currencies, and this total was about 1.282 billion. Thus, if you took the exact percentages, a total of 5.477 billion flowed in, and 76.59% of that was Tether, while 23.41% of that was fiat. And you want to know what's hilarious about this number? Bitfinex has admitted that their stablecoin is only 74% backed by cash and securities, not being completely pegged to the dollar. Just a coincidence that these 75-25 numbers show up in the actual daily trade volumes? So why is this alarming? Well, looking at this chart, which shows what Bitcoin was traded against throughout its history, for the longest time, from 2012 all the way up to the beginning of 2017, it was fiat currencies. But beginning in 2017, USDT started to take over, the poop yellow color on the chart. But by June of 2018, it was still 60% fiat and 40% crypto. Then the Tether flip happened, and now it's 75% USDT and 25% fiat, which if you know what is going on with Tether, this should freak you out. For short, Tether is being investigated by the New York AG for fraud. The New York Supreme Court just confirmed it has jurisdiction over Bitfinex and Tether. Tether has never been audited, and the large majority of all USDT are in the hands of 130 wallet addresses, with a large majority of them being exchange wallets, with the biggest culprits being Binance, Huobi, and Chinese exchanges. Binance has been up to no good with Tether lately. If we add up their current balances, their exchange holds just under 440 million in Tether. I did a live stream in early May checking out the USDT rich list, and this was before all the New York AG investigation craziness began. Binance held nearly 800 million Tether. In 4 months, nearly 50% of their Tether has gone poof. Yet, if we look at their exchange trade volume, today is higher than back then when I took the Tether snapshot, by nearly $1 billion. I checked out the Tether rich list in a live stream, just to show the biggest players involved. And this exchange was number one with over 782 million Tether. Luckily, I caught it. And if we look at a breakdown of Binance's volume by pair, it is 75% Tether. Higher volume today than back in May. 75% Tether, yet Binance's Tether reserves have been reduced by 50% since then. Does that make sense? Oh, hell no, it doesn't.
My general feeling is that there's always more fun in the community than there are positive things.
And like I showed, Bitcoin is fighting to keep its head above water. If we check out the price chart and volumes from the exchanges Binance, Coinbase, Bitfinex, and CME Futures, you can see Binance BTC USD pair in the pink purple is what's keeping it alive, as its volume crushes everything else in comparison. Now here's the theory of what could be going on. Tethers have been proven to be worth only 74 cents, not the full dollar. Now there is a retail market full of traders who, when they first get accustomed to the crypto markets, buy their crypto with fiat off exchanges which require KYC. Eventually some of these retail traders mature and move to other exchanges, which don't require KYC, but only have Tether trading, because those traders are looking for those 10x to 100x gains. The crypto cartel, which includes Bitfinex, Bitfinex Whales, Binance Huobi, Binance, and Huobi Whales, have been slowly draining the market by trading every Tether, which has an actual value of only 74 cents, against cryptos, usually Bitcoin and Ethereum, which do have real volume fiat flowing into them from the retail traders, buying the USDT and chat coins off the non-KYC exchanges. They then take those BTC or Ethereum and then dump them on the fiat exchanges, getting USD, CNY, and the like from the retail traders who are buying into the market with fresh fiat. Going back to Binance's volume chart, from May to June on their exchange, they were trading that missing 400 million in USDT for Bitcoin, which of course pumped their volume and pumped the Bitcoin price to where Bitcoin jumped to nearly 14K by the end of June. And ever since, they have been getting fresh fiat by dumping that BTC on fiat exchanges, yet playing a fine balancing act of keeping the price above 10K to keep retail confidence at a level where they put new fresh fiat in. But that is just a theory based on what I've been seeing in relation to Tether trade volumes and exchange balances. There's a possibility that the demand for Tether is real, and I would like to examine the argument for that. There was an article written at the end of July titled "Millions in Crypto is Crossing the Russia-China Border Daily. There, Tether is King." In the article, the head of an over-counter trading desk in Russia spills the beans, who they call Oleg, as they requested his real name and company be withheld. Oleg says his OTC desk sells about 3 million worth of crypto every day to Chinese merchants who come in daily with heavy bags of cash. Only 20% of his sales are in Bitcoin, while the other 80% is purchasing Tether. What the hell are the Chinese using it for? According to Moscow OTC traders, as the go-to remittance service for local Chinese importers. According to Oleg, just in Moscow, the total volume of USDT purchased by the Chinese can reach 10 to 30 million per day. These businesses accumulate a ton of cash in Moscow and need the Tether to transfer it to China. Is it possible the demand for the stablecoin is actually real? Well, viewers, I'm not like the others, and even though Tether isn't in the news, I will keep investigating, learning, and understanding its effects on the crypto markets. I mean, 75% of the markets is Tether. You wonder why the other YouTubers don't talk about it more. Cheers. I'll see you next time.